always going to be great. But the live discussion we're going to have now, obviously, if you have questions, please let me know. We'll tackle them as we tackle those topics. The main idea for this second session is to continue to do what we did towards the latter half of classroom number 1, which is putting everything together, putting the tools to work in such a way that we can find setups, manage trades, and because of that, we're going to expand a little bit into tools that you might have in addition to the volume max. So of course, everyone here has the tops and or top tier. I'll refer to them both because I know some of you have one or the other. The main thing to remember about both those tools is whether I'm referring to the wave or the Darvis, you're just going to look for your version of that wave, your version of that Darvis. I know not everyone has price movement ranges, but I know many of you have. So we'll talk a little bit about price movement ranges with volume. PMRs, price movement ranges, whether it be hourly or daily, are volatility tools, right? When we add volume max to that, again, we're going to get a whole other depth of information. And, you know, some of you are asking, Rog, and I did get a few emails about this, Rog, can I use volume max as a standalone? You certainly can start there. There's absolutely nothing wrong with that. It has automated support. It has reads, so you can confirm that support. It has automated resistance. Again, you'll learn to read the VScore and or even the sweeps intraday to confirm those levels. So yes, it can be. It could be a great foundation to that. Now your foundation really is tops and volume max or top tier and volume max. Remember, you've got a really good toolkit right there. And then if you want to add on things like the price movement ranges, again, these all work together. The entire toolkit that I've used throughout my career is not taking one style of tool and overlapping it with another. We don't need more price-based indicator tools. What we all need are those 4 factors we talked about in the first session. How are we measuring price? How are we measuring price and time? How are we measuring price and volume? And also price and volatility. So price, time, volume, volatility, those are the only 4 factors in the market, right? News isn't, earnings isn't, even macro, I won't say is a main factor because the perception of macro is going to be different. So we want objective tools and we want automation of those objective tools. And that's where I feel so confident that after you take some time to use these in the market for a week or two, you'll start to see these patterns that we're talking about, these combinations, as I'm calling them. You'll start to see them arrive again and again. So let's build more of a vocabulary and more of a visual for those so that you can start to put these together. Now, no 2 setups are going to be completely identical, but they'll have some of the same features, right? Ultimately, how many of these indicators you want in combination is what differentiates us as traders, right? So the idea here is if you're more conservative, and we kind of started off the whole conversation of winners always have an and, right? The more ands you have, this and this and this and this, those are filters. They're going to give you fewer opportunities, but the thought is potentially better opportunities. If you have fewer ands, you're likely going to be a more aggressive trader. You want a higher number of trades that still have a good probability, but you're willing to be a little bit more active and take trades with fewer filters, right? So it's not a matter of right or wrong. It's really a matter of how aggressive or conservative are you as a trader. And then along those lines, if you're not sure, one really easy litmus test is how many ands do I need? Yeah. All right. So we covered intraday pretty thoroughly, and I've given you all the notes. That link to the workflow, especially for those of you that are already in the Sector Secrets Mastery, you're already familiar with Workflowy. If you're not going to break anything. It's a read-only version of the class notes. And you'll notice on some of the headers, I'll say click on the circle to expand. And that's exactly what I mean. There's a little circle. If you click on that, it'll expand that particular section of the notes. So it's really cool. Again, you can't break it. Feel free to click around. And let's get to it. Now, since we covered intraday, I'm not going to go back into that. I want to get into combinations for end of day and combinations for weekly long-term account growth. And then again, if you have any questions, my only request is keep them as on topic as possible. And that way we can have a nice seamless conversation covering all the things that you need to know to put this toolkit to work. All right. Brian asks, when a symbol is trending, okay. So for those of you saying, Rog, how would I know if a symbol is trending? I'm brand new to the tops or top tier. That is actually the multi-trend or the multi-structure. Now, notice on my example charts on the screen, I don't have them running, mainly because I don't want to confuse anybody if you've got tops versus top tier. But that is the foundation. If you're in the room, which I know many of you are, you're used to seeing my charts look more like, say, this. And this is the foundation that I'm referring to that lets you know if there's a trend or not. Okay. So back to the question. So if you get a downtrend, oh, hang on, let me go back to Brian's question. If a symbol is trending, how concerned do I get when price is outside the value area high, value area low range, or is it just a natural function of a stronger trend? So Brian, whether it's the value area high, low barriers, whether it's the Darvis support and resistance, right? Those barriers, that's what they are. Support and resistance is a barrier or a containment. I would expect less containment in a trend, correct? I'm not as concerned. And by the way, if we're moving higher in an uptrend into a value area high or any kind of resistance in a trend, in an uptrend, I'm not going to take that trade. I'm not going to use that as a level because the trend tells me the follow through is more likely. Yeah. All right. So if y'all want to take a look at the notes, they're in the alert section. And if you just joined us and you're looking for these notes that I've alluded to, I'll send it through in the general chat, but it is in the alert section, gang. You can see the link there. Volume Pro Max 2.0 Toolkit Class Notes. All right, so yeah, in a trend, I would expect those levels to be tested and likely broken. Now, it doesn't mean that I'm going to enter at those levels, right? But yes, to your question, I would expect them. I wouldn't be surprised that they're outside the range because trends are constantly looking for higher highs and higher lows, and it's really expanding the range if you think about it in another way. All right. So let's see. Senator PP says, you said do not buy a downtrend, but you will get a VScore and Darvis signal when price is sharply down and Momo and trend is red. Do I still buy? Senator Appy, yeah, it's kind of the same. So great follow-up question. It's the same idea and same answer as what I would give Brian. If something's trending lower, whether it's a Darvis support level, whether it's a VScore low level, whether it's a value area low level, even if it's an HPMR or DPMR, in a downtrend, I will not buy calls. They may work sometimes, right? Volume does not care about structure. Volume does not care about time. Volume does not care. It's just volume. However, probabilistically, if I'm going to put an and filter, correct. If it's a downtrend, I will not buy. Yeah, you all will not see me break that rule. Now, some of you might say, Rog, is it worth a shot? I would say probably not. Yeah, I would say it's not worth the shot at all. Because once something's trending lower, that structure does suggest that even if we make a pit stop and bounce a little bit from one of these levels, the follow through is likely going to be very short-lived. All right. Okay. Let's see. So let's tackle a few more questions. And again, if you have any tech questions, feel free to put them in off topic. Bot will be typing away in that part of our room. All right. Sharon says, shall we buy a put at 30 delta? Sharon, I do not use Greeks. So what are Greeks? Option Greeks, for those of you that are unfamiliar, especially if you're in the mastery, because we don't use them. I do not use options Greeks because the information that I need is already in the tools that we're using. So these are just mathematical and quite frankly complex mathematical gauges, and they're just named after Greek letters. So that's why they're called Greeks. And it just gives us a way to understand different market conditions. All right, well, if I want to know whether or not an option could be bullish or bearish, I'm going to look at the underlying. If I'm buying SPY, I'm going to look at the ES contract. I'm going to look at the actual symbol of what I'm buying an option of, what I'm buying a derivative of. So a lot of the questions that Greeks attempt to answer with complex mathematics, we're going to be able to see based on what's on our chart. So delta, to your question there, delta is essentially how much an option's price will change relative to, for example, if we're looking at the delta of Apple, that delta is going to tell us how much will the option that we own in Apple change as Apple's price changes. That's all that it is, right? And for me, an at the money strike or slightly in the money strike is going to mimic the stock in a fairly accurate way. Obviously, options just aren't what's known as intrinsic, right? They don't move only because Apple stock has moved higher. Options will have an effect in terms of how close are these things to expiration, and also the way price is moving, the volatility. So while a stock is kind of a one-dimensional sort of price move, options are three-dimensional. There's time, there's volatility, right? That's going to affect the value. And then how close are we to the current price of the stock? So that's what all these are measuring. So whether that be vega, theta, gamma, I don't use any of that. It just unnecessarily complicates something we can read with the indicators that we have. Now, I will tell you that for the most part, sort of anecdotally, I've been told from those folks who use Greeks and then also follow me, so Rog, yeah, you're usually going to be somewhere between a 50 and a 70 delta. I never want to be less than, you talk about 30, that would be out of the money. So we would not be in a 30 delta because we're going to buy at or in the money strikes. Okay. All right. So again, don't use Greeks. That's the way that I look at it. All right. So, because we are buying options here together when we are trading, that there's some relevance, but keep in mind, there's really two rules, and you'll learn these rules and how to put them to work in the mastery, but I don't want to buy options that are below 750 open interest, and I don't want to buy them out of the money. That's really the two main rules. Yeah, those are the two main rules. All right. So moving on. So let's get to combinations to consider for end of day. And you know what? Let's just use Apple. And a lot of what we've been doing here is kind of, rather than a well-chosen example that's already happened, what we've been doing is live analysis using the tools. So you can learn how to use the tools and look at how setups happen. So if you want to let me know a symbol that you'd like to trade, throw it in. I'll cover some of them. But since we're on Apple here, let's talk about Apple, right? Now, the first thing that I always want to make sure is that when I'm trading any symbol, if I'm going to trade Apple, it can't be in a downtrend, right? Now, there's a few other filters that you can use with the tools that you have aside from the volume max. Probability for follow through is going to be far better if you have 5 candles of the same color, either red for bearish or green for bullish. So while that doesn't have any relevance to the volume max, it has a lot of relevance to the tools that you have as part of this class, which is what's the chance of follow through? So in a lot of ways, I could look at Apple and say, sure, I've got a little bit of VScore support just below the +1. I've definitely got some VScore support at the 0. Okay, Rog, I've got a Darvis, right? But would I want to trade Apple on the daily time frame? I probably would not, because I don't have the 5 green. All right, if I look at the 4-hour chart, I definitely would not want to, right? I lack the 5 green. So part of trading is which time frame is giving you the clearest upward or downward trajectory, right? Actually, the best time frame to trade on Apple, based on its candle color and frankly structure, is the weekly, right? The weekly chart for a long-term account growth. Okay, Rog, how will we set that up? The +1 standard deviation has one hit. The one hit is the discovery hit, right? Now I know, I can see that support kicked in that area. Awesome. The second hit, if and when we get it at the +1 standard deviation, would be where I could consider buying Apple. And this is the last time we got down there. I'm just looking for that level. If you're curious, Rog, where is that, the standard deviation? Throw the VScore bands on your screen and you'll see that line. It's kind of like this right there. I'm just kind of etching right over it. There you go. That's where that VScore band is. And so that gives you a specific price level that you're waiting on. Now remember, VScore bands like the VScore are dynamic, so I'll want to take another read, right? I want to take another read of the chart. Okay? So that's the weekly chart. That's the weekly chart of Bader. No, it's the weekly chart. So I don't have something on the daily. I don't have the 5 green. I'd prefer, whenever I'm buying, are there going to be exceptions? The day trading, I don't need 5 green. We didn't make that when we talked about that in the classroom session before. The daily, I would like 5 green. The 4-hour, I would like 5 green. The weekly doesn't have to be, but if it does have it, and we've got a VScore low, that's just that much better. So many more ands to work with. So sometimes you might say, Rog, I like Apple, but I don't know what time frame to trade it on. Short term, day trade, swing, or long-term account growth. This would be a long-term account growth. So let's get a little bit into what that would be. There are certain combinations for long-term account growth that I like. Number one, obviously, if we have uptrending structure, awesome, right? The main rule is it cannot be a downtrend. So as we talk about, I can't buy downtrends for swings. I can't buy downtrends for day trades. I cannot for sure buy downtrends on a long-term account growth. So that's a really hard rule. So then I'll ask myself, well, where has the VScore shown support? Now I'm going to focus only on support because my long-term account growths are all bullish plays. They're all bullish plays. Okay. So where is it shown support? Now, if I have, what about my and, right? What would I like as an and? I would like a Darvis, a wave. It doesn't have to be all of these, right? Darvis, a wave. Maybe it's the VProfile, right? I need an and, ideally. Now, on the weekly chart, now some rules are specific to the time frame. On the weekly, especially when the candles are green and there's a nice, in this case, Apple is in an uptrend. On the weekly chart, for example, if there's a trend, I'll have the wave, right? And oftentimes the wave and the VScore can overlap. So if you're wondering, okay, Rog, if we look at, I'm going to go into the studies and turn the wave on because I have it off, I think, right now. So if I turn on my, bear with me. I'm just going to make these visible. All right. Do you see where the +1 and the top line of the wave are lining up? There's your and. And it works because we have an uptrend. Without the uptrend, do not use the wave, right? So only on the weekly, would I be okay to trade VScore only? But I always prefer an and. I'm okay with VScore only on the weekly. It's probably the only thing that I would say, hey, if you want to do a standalone on the weekly, VScore would get the job done. But again, I'm always going to prefer an and. Everything else has to have an and. Ands are always going to be great. All right. Okay. So that is an example of a longer term. Now, there's a few other things that I'd like to see. Another level that I like on the weekly that's kind of unique to the weekly. Again, we broke down day trading versus swing versus weekly. You have something called the 200. I'm just going to call them dots. The 200 white dots are known as propulsion dots on tops, and they're known as top tier dots on the top tier platform. But they're white dots that represent where the 8 and the 200 have crossed, and the 8 remains above the 200. And that's when the dots will plot. Ideally, on the weekly, I'm going to go back into studies and turn that on so everyone can see that. Ideally, on the weekly, the price action is above the white dots. Okay? Now, again, does it have to be? It doesn't have to be. These are all really along the lines of what would I prefer to see. And let me see if I have the dots running on this somewhere. But again, if you're looking at that top tier or tops, the white dots, that's the 200 specifically. So let's see here. Turn that on. And I'm going to show you one other thing I do to the dots, because there's a lot of great information on the prop dots, but the only one that I really like to see, and this would be really on the daily and the weekly, I'll pretty much put no on show. So if you're wondering, Rog, yeah, why only the white dots? Because when you look at overall participation and you're looking for a sentiment-driven line in the sand, a line in the sand where bulls are still actively looking for opportunity, most of them are going to be doing that when price is above the 200. And you can see, is Apple above the white dots? Absolutely. Absolutely. Okay. So the white dots can not only be a level from which to buy, but the white dots can also be something you can confirm with the VScore. All right. Okay. So that's really, when it comes to weekly, that's really it. The weekly is pretty uncomplicated. And it's probably the only time frame, my only strategy, that if I said, look, I'm only allowed one tool, all I'm allowed to do is look at whether or not we're at a VScore support level, it's probably the only one where I would say it can be a total standalone. But why not use the other confirmation tools that you've got for a more complete picture? Yeah? Okay. And yes, it just can't be in a downtrend, Ralph. It just can't be in a downtrend. So the question here is, if the weekly is not in a trend, would I still be just okay with the VScore? Yes. Yes, I would. I don't want to force the VScore to answer all questions. It answers a volume question, but it can be a standalone. Yes, it can. And by the way, the last time we tested the dots, right? The last time we tested the dots, or if we test them again, will probably be down near a -1. So these are things you use in combination. Far too many traders are looking for templates, right? What you want to know is what each tool does, and then you can use them in combination. So that's why you have a kind of a finite number of tools that answer a specific question. And again, what do the dots answer? Whether or not the 8 is above the 200 moving average. That's essentially it. It does a few other things under the hood, but just to keep it simple, if price is above these white dots, it's in bullish territory. And that's an ideal place to think long. And then if you got VScore support kicking in, all the better. Stack the tools. Don't look for a template. Stack the tools. All right, so let's go back to the chat here and questions. Question on Walmart. All right, so let's take a look at Walmart. So Walmart just had earnings. So in terms of the replay, when those of you that are watching this later on, context matters. Context will always matter. Walmart just had earnings, right? And we're seeing a big move on earnings, huge move on earnings. If you were not already in Walmart and you're thinking, Rog, does this present an opportunity? Well, right away, what am I going to say no thank you to? Are we going to trade a daily chart swing trade? Is that even valid? No. I don't have the requisite number of red or green, so pass. Let's go to the weekly. Again, I don't need to have a series of green or red. It is nice. Walmart, is it in a trend? Take a look at the bottom of your screen. Look at your multi-structure or your multi-trend. Walmart is not in a trend, but it's not in a downtrend either, right? So you want to make sure at the bottom of your chart that Walmart's not in a downtrend, and on the weekly, it is not. I don't love the red candles. They're allowable, but I don't love them. So you might say, Rog, could this affect my position size? It should. But strictly from the VScore. So Vincent, when was the last time we got down here? When was the last time we got down in this area? So all I'm going to do is draw a straight line across the last hit. That was that discovery hit, right? And actually we had another one just before it. So the only way we know what VScore level matters is because it's been tested and proven to be, yeah, not only was that a level that showed a low, but then price came off the low. So remember, the first hit requires what? A second hit for the confirmation. So are we in that zone right now? Yes. Again, because Walmart's coming off earnings, I would wait to see if we can at least hook up a little bit off this low and acknowledge that we've been here before and that volume is willing to step in again. So I would wait for that. But strictly based on what we're seeing right now, yeah, Walmart would be potentially buyable in this area. Would I like other tools to help me out? Sure, that's where, again, you can turn on your, whatever it is you're using. But for us here, we could use the Darvis, right? Are there any Darvis levels that we could use? That's one thing I could look at, which I think is really helpful. So I could look at the Darvis. Do I have one that I can use? Not right here, but you know what? Here's the most recent Darvis right here. Here's the one that preceded it right there. And then here's the next most recent Darvis. We're in that zone. I won't say that's a strong level. I don't have a current Darvis helping out, but that's kind of interesting. The V-score is really likely going to be the determining factor. So I would wait to see if we can come up off the lows. Maybe let's see the V-score hook up a little bit and then go from there. So that would be the weekly chart. And I know a lot of folks are very interested in, okay, Rod, post earnings, is this sell-off an opportunity? The V-score says yes. The V-score says yes. All right. Next up is, and again, I hope that when we do these things live, knowing that every single setup is going to have a nuance of its own. One of the questions that I was getting in the Sector Secrets Mastery is, Rog, does the 0.2 always mean that we're going to buy? No. Right? Meaning whatever the V-score reading is? Absolutely not. It's always that discovery of where have we been before and could we get there again? So every single symbol is going to have a slightly different way that I'm going to look at the V-score because it's going to have a slightly different read, right? So again, fight the urge to turn things into a template. I know the brain loves to compartmentalize. It's probably one of the reasons that so many traders struggle at trading because they have that need to compartmentalize and say, when this and this and this happen, I can do whatever. You still can, to a certain degree, have a process, but every trade is going to have some nuance. In this case, one of the nuances is earnings, dealing with this high volatility event. All right, what about Bank of America? Awesome. So let's do this. When I'm looking to hold something overnight, I can look at the 4-hour, I can look at the daily, I can look at the weekly. Now, for the purposes of this class, and frankly, from the standpoint of what reflects my trading and the Sector Secrets Mastery, which, my trading and the Mastery trading are one and the same, right? What I do is what I share in the Mastery. Very seldom do I trade the 4-hour. It is out there. It's something I do like to look at, but from volume purposes and also reflecting what I actually do, I like the daily. Daily is a fantastic time frame. So if I'm looking at Bank of America right now and asking myself, hey, is there something I can do here? I've got my VScore. I'm going to go look at some of the recent lows that we've been to. I'm just going to ask myself, am I near any of that? So you can see we've actually had 2 hits before in a very similar area on the daily chart of Bank of America, right? The next thing I can do is ask myself, all right, what's my and? What's my and? Is there anything where we are right now on Bank of America saying you've got a VScore support and? So remember what our ands are. They could be Darvis, they could be wave, right? They could be price movement ranges on a daily chart. I'll use the daily price movement range, and Bank of America is actually in an uptrend, right? So if I go and let's turn on the wave here. And just because we have VScore bands and wave, just from a visual perspective, you'll see sometimes I'll turn these things off, or I'll just won't show the plot, just so it doesn't look like too much during a classroom session and become visually overwhelming. But there's your tops wave. So, okay. I've had these 2 hits in the past. We bounced up from these areas. Looks like I'm down there again, and I'm in the wave. Okay, let me show you one other and on Bank of America. So the VScore is where it's at, right? Which is great. So I can look at other tools. Well, let me show you this here. So this is from the layout that I use in the mastery. There's my multi-trend at the bottom. I have a trend. There's my VScore, same VScore. There's my wave. It's the top tier wave. And I've got a potential daily price movement range. We'll see where the daily price movement range is tomorrow. Right now, we're not there. But if I were to look for an opportunity on Bank of America, VScore low, and at least the top line of the wave. So there's what a setup looks like. 2 things confirming there's a reason to look for support. Now, again, I want to make sure that when we do this, we do this in such a way that when you go back to review, you've got context for when we're talking. Today happens to be the Thursday before options expiration. So we talked about an event just before, earnings, right? What's another event? The 3rd Friday of every month. So if I have a 3rd Friday coming up, which we do, as we're doing this live class coming up tomorrow, I'm typically going to wait for price action to pull towards high open interest levels. And that would give me a third and. VScore, wave, and a high open interest level. So for OpEx, you bet I'm going to use that third filter. Okay. So again, this is the difference between classroom, idealized textbook examples and what you and I are going to deal with on a regular basis together in the mastery. How many of you are not in the mastery right now? So I know I'm referring to it. How many of you are not? Okay. Not, but will be. Love it, Seth. Okay. Saudi is upgraded. Fantastic. Fantastic. So this is giving you an idea of whether you're trading with us in the community or whether you're on your own. I don't want you unequipped with, okay, wait a minute, Rog. I've got a VScore. I've got the wave. What else would I want to be aware of? Earnings, options expiration, FOMC, right? These are some basic things that when you understand that certain events can override almost everything because it's a major event that has a lot of emotion and a lot of, in the case of OpEx, literally dollars, right? Literally dollars. It makes sense to understand the context of the calendar. Remember our 4 factors: price, time, volume, volatility. Time is knowing OpEx is coming. Time is knowing the FOMC meeting minutes or the FOMC meeting or end of quarter etc., is happening. And these are things that happen on a schedule. They're not surprises. No one can plan for a surprise. But these are things you're going to want to put into other, again, whatever you're using. In this case, volume max, we're going to put this into your process. So whatever you're using, this is another factor that most traders overlook. All right. Okay. So Bank of America, timing would be tomorrow. Setup would be wave VScore. And the third and would be looking at the open interest, which when I look at Bank of America, just to give you some insight, when I look at Bank of America, would I expect there to be some deeper pullbacks tomorrow? Yeah, I would absolutely expect a little bit more weakness. Not a ton, but I would not be surprised if we sink further into the wave with options expiration. I would not be surprised at all based on the size. All right. Next is, and I want to keep going with these examples because we can build the trades together. We can use what you've learned in classroom session 1 and keep putting these tools, layering them to say, okay, which direction am I trading? What am I waiting for? Right? Okay. Let's see. Questions. Bear with me, gang. So that was the Bank of America. Thank you, Philip. So Ram asked, am I buying leaps off a weekly entry? Great question. So when we talk about long-term account growth, it's one of two things or a combination, Ram. You can buy leaps, I would go 12 months out, or you can buy shares, which is what I actually prefer. If you're wondering which can I do, Rog, if you can't buy 100 shares, if your account size or your risk tolerance does not welcome 100 shares, go with one leap because that represents 100 shares. So I teach folks in the room to do one of either. So in the example of Apple, it would either be 100 shares or one leap, which represents 100 shares. Leaps do work well. They can be more volatile. And remember, when you have shares, there's no expiration. But the one nice thing about leaps, when you're using the VScore to set up a trade, like we talked about, say, potentially with Apple, is that if you decide later on, gosh, that trade worked out so well, I own the leap, but I don't own the shares. Remember, you can always exercise the leap as long as you have the cash to buy 100 shares. You have the right, but not the obligation, to buy those shares from your strike price. So a leap gives you a little time to think about, do I really want shares or not? Because if the trade goes in your favor, you could exercise the option. All right. Okay. Chiranjeev asks, what defines whether the stock is in an uptrend other than higher highs and higher lows? Do we check the stock, the respective sector, or the overall market for an uptrend? So the easiest way to do it, let me bring over the other view that I was mentioning. All right. The easiest way to do it, my friend, is you have access to what's known as the tops. In fact, let me just now my top tier folks, remember, you don't have to worry about tops. I'm talking specifically tops for those of you that don't have top tier. Okay. So let me turn on the multi-trend on this chart. Okay. See those two rows of color? I like them at the very, very bottom. I don't know. I'm kind of a stickler for that visual. So let me just put it to the bottom there. There we go. It's the foundation, right? So everyone here in this room either has tops or top tier, right? This down here is known as the multi-trend. So if you want to know whether or not something is in a trend, the lower row of this indicator, when green, is telling you you have a trend. So you don't have to go through that subjective higher high, higher low, Chiranjeev. You don't have to wait for the 20, 50, 100, 200 across or any such very delayed, slow thing. You can look at two things. One, do I have predominantly green candles? If you have mostly green candles, once you get more than 5, there's a high degree that you're either going to have an uptrend or might even have an uptrend already. And then once you've got 10, 20, 30 green candles like we do here easily, you don't have to guess, but it's very likely that we have an uptrend when you have this many green top tier candles or tops candles, the grab candles, which stands for green, red, and blue. But you can look down to the multi and look at that lower row, and we've had an uptrend on the daily chart of Bank of America since mid-June, right? So not only can you see that we have a trend, you can also see the history of that structure. When do we transition from a neutral to an uptrend? When do we go from a neutral to a downtrend? When did the uptrend go neutral, right? You can see that live on your charts. That's what defines it within the toolkit that you've got, okay? Now, if I'm trading Bank of America, I would like to see the Dow strong. I would like to see financials strong because that's great alignment. So XLF also in an uptrend. XLF might be a great candidate for a buy, right? Just as Bank of America is. So when you look at an individual stock, that's the smallest representation of financials via that company. You can go to the next tier up, which is a group of bank stocks. That would be the XLF. You can go to the next group higher, which is where is the XLF most weighted? Number one, Dow, number two, S&P. So if I can get alignment of index to sector to stock, or at least with sector and stock, there's a higher probability of follow through. Okay. All right. Do I ever go short if the trend is down, Henry? I love the question. I love the question. Here's where I think every single trader has to be really transparent with who they're teaching. So I have two beliefs, Henry, that I know that have been proven by time. You ready for the first one? Because it's a shocker. The market is rigged. Whoa, what, Rog? Yeah. How is the market rigged, Rog? It's rigged to the upside. If given enough time, stocks go higher. Not all stocks, not meme stocks, not stocks that aren't weighted in the SP, NASDAQ, Dow. Overall, the indices are designed to go higher. Think about what every rebalance or reconstitution really is under the hood. They unceremoniously dump underperforming companies and they add outperforming companies. So that's when you look at almost any 10-year chunk of time, since I believe World War II, in the stock market, at worst, you might be flat. At best, you're up. The stock market is rigged to the upside. So I tend to like to trade to the long side. Most market participants are buyers. Most retail traders do not understand short selling. And because the Federal Reserve and different central banks have become so active supporting the stock market with monetary policy, I wouldn't have said this probably pre-2008. Downtrends were great. They actually existed, and sometimes for a longer period of time. But now you have so much monetary policy intervention. Anytime the stock market goes down past, say, 20%, downtrends don't last that long. But yes, you can. So what would the formula be? You'd want resistance on the VScore and ideally red candles. We have a downtrend. We had a downtrend in financials, right? You can see that there. Okay, Rog, how do I know it's a downtrend? Look at all the red candles. And when the red candles, right, when the red candles then see the red on the lower part of this indicator? See all this red here? We wobbled for about a day and then right back to that. That's when you would look at the VScore. And again, I love that you asked me something that I wasn't prepared for, because then we can go right back to the indicator. So right after we had at least 5 red candles in a row, ideally a downtrend, I can start looking for opportunities to short if I want to. So the first opportunity would have been, here's one peak, all right? There's a test. Even though it got a little bit above it, that's another test right there. That one would have been a little low, but those are all areas where the V-score started to top out. Would I've loved to have seen something up in this area at the 0? Sure, right? I could look at that kind of as a major level of resistance, but we never got back up there. What we did do is get here, got there again, and almost got there again. And then we never saw it again. We never saw that level, this initial level right here. We never saw that level tested again. So those would be 4 hits. The first one is pay attention. The next 3 would be opportunities. Why long puts or shorts? Look at the candle colors and then look at the resistance of the VScore. Does that visually stand out? And the reason I'm drawing and showing you is once you can visually see what you're looking for, now you know to start putting the pieces together. Because again, there's no textbook entry, right? Understanding the real way price moves as opposed to 10 really great entries, it's never going to serve us. So yeah, that's the way I would look at that. Henry, thank you for the question. I typically don't like to be long puts. I'll do it. In a situation like that, I would have to. That's the only thing I can do, if anything at all. All right. So thanks for the question on the downside. And you have the tools and you have the way to do it. Now, you might say, Rog, well, look at these resistance levels here. With that, let me ask y'all. We hit a high here, hit it again, hit it again. Am I allowed to buy puts on XLF? Because look, hit. So I got my discovery hit here, the first hit. Am I allowed to buy puts here? No, right, because it's in an uptrend. It's got the green candles. Do you see how a lot of traders picking tops get absolutely destroyed? Because they're looking at an indicator as a holy grail. They're looking at it without context. Context is, it could be an event, most definitely would be the trend. Now, maybe you're starting to think back on some of the indicators you've used in the past to no avail. Rog, I wasn't looking at structure. Well, with this toolkit, not only do you get the volume toolkit, you get this multi-trend. You get the grab candles. That alone, gang, is going to make a huge difference in your trading. Now you start to add participation. You're seeing things that other people just don't see. Why would price kind of pull back from here? Why would momentum traders who are thinking, oh yeah, we're making a brand new high, let's buy, why would they get burnt from here? Well, the VScore told them so, but they don't know, they don't have it. It doesn't exist in their world that there's volume-based support and resistance. How many times in your past trading, chasing Momo, might you have gotten long through here because we took out the previous high? We're told to do that, right? Oh, I took out the previous high. Let's buy. Not if we're sitting at this VScore resistance. In this case, just above the +2, right? It did it again, right? Pull back. Did it again, right? So if nothing else, now you're getting the context for not only where you could buy to initiate the position, but where not to buy and maybe break those old habits. And I say break those old habits. I'm not sure that anyone here has a Momo habit to break. But again, the vast majority of traders do like breakouts. And so I'm just showing you that's where maybe in the past, it's not that you're a bad trader. You were just taught bad timing. And they didn't, and whoever taught you didn't know, hey, there might be volume waiting there. And you're not on the size of the follow through. All right. So GGG, yes. You can look at the VScore for entries and exits. But remember, it's not just the VScore. You can look at the VProfile for entries and exits. Yeah. You can look at the Darvis for entries and exits. So remember, support and resistance is what everything really, at the end of the day, is designed to do. If you buy at support, your target is resistance. If you short sell or buy puts at resistance, support is your target. And because all these tools have support and resistance built in, the Darvis, the VScore, the VProfile, now you can start to identify, hey, what's the range this is likely going to be stuck in, and how do I pay myself within that range? And if the trend erupts, great, the range could expand, but you don't want to get in on that range expansion. You want to be in on that dip. That's where the wave is a really cool way to get in, kind of like the way we talked about with Bank of America. All right. Let's see what else we have here. So again, if anyone needs a refresher on what each indicator does, please go see classroom session number 1. And if we have time, I'll be happy to go back, but I want to make sure that when you all go back to recap and review classroom session 1 and 2, it's all good new information or practicing what you've learned so we can continue to build. And you've got a great resource via the notes and via the sessions to refer back to. All right. So questions on, let's keep going. And yeah, we're going to keep going through. So I do have, and your questions are perfect, by the way, again, because you see today we want to cover long-term and we want to cover daily. And we want to cover more of these combinations, right? So now you're seeing with the combos between volume max and tops works, or we're between volume max and top tier works, and between volume max and even daily and hourly price movement ranges. All right. Let's see here. And again, if you have any tech or indicator questions, please put them in off topic and Lorna Bot can help you there. All right. Let's see. Questions. So yeah, it looks like we're going to have a lot of you. I'm looking forward to, yeah, when I see you in the room, if I haven't already seen you in the room, when I see you in the room tomorrow, yeah, make sure you give me a shout out and let me know you're here. Yep, it'll be great to see you in the mastery room. Awesome, awesome, awesome. All right. GGG, I'll tell you, since you're using the bulk of the tools that I use, yeah, you're asking about, what we do in the room. Yeah, I mean, basically, if everything we're doing in the class is starting to resonate and you want the trades that I'm taking based on what I'm teaching, yeah, that's where the room is going to be a hand in glove fit. All right, what if a company beats estimates but did not have favorable forward guidance? Richie, use the indicators to measure whether that move is actionable, right? Because that's a very subjective thing. So what we want to do is say, look, if the company beats, but guides lower, or the conference call didn't go well, how do we measure that? It's very difficult to. So I'm going to go back and say, okay, where is my VScore? Where is my wave? Where is my Darvitz? What's the underlying structure? So rather than trying to have to figure out what that conference call, what earnings actually meant, I'm going to see what it did to price, what it did to volume. All right. And that's the way I would treat every earnings, because I think this idea that after earnings, we could have a really good, let's use a great example, IBM. I haven't looked at IBM in this way. So let's do this. Look at this hole in the chart. That wasn't even earnings. It could be any event. So I don't want to make this just an earnings conversation, right? It could be any event. The last time IBM was down here just below the mean was right in there. It did go a little bit below this discovery hit where you say, oh, okay, this is where support is. It did go a little bit below it, but not much. And then it bounced from that level. I don't have to know the why. I just have to know the what did it do. Does that make sense? So then we have this move, not even earnings. What gives, right? What happened there? Yeah. Now, this is where a lot of traders get hurt. They presume that after a gap, it has to fade. Who's heard of the gap fade? This is where VScore and structure are really going to save you. Okay? Gaps don't have to fade right away, right? Not at all. And they certainly can take their sweet time doing so. But if you're wondering, after a gap down, Rog, we get this huge move. Are institutions getting involved? I won't know, right? I know that last time we were down here, there was some support. And then for the next, let's see, how many days was this? From approximately mid-July, I didn't want to draw anything on there, from mid-July to almost, okay, for about a week, for about 8 days, 8 full days. Notice how even though price was moving lower, what was happening? Yeah, that was size coming in, gang. Do you think an institution minds to scale in about a 20-point range? They really don't. An institution has no qualms about a 20-point range. That's pretty much where size, look at this. That's why the V-score stopped. Notice how even though price kept going lower, V-score didn't. Now, some people say, Rog, is that divergence? I don't subscribe to that. What I'll say is price kept going lower and volume kept showing up. And then eventually it just came up off the floor. Does everyone see that? So I want to make sure, none of these are examples that I even looked at, and I purposely tried not to, because again, the idea that textbook examples are going to help you, I want to make sure they look real, because real is sometimes ugly, right? Real is sometimes very ugly. This one's not too ugly, but it gives you a good idea. You know, we didn't just stop and fade at all. In fact, for a brief period of time, the daily went into a little bit of a downtrend. Okay. IGV. Okay. Would I consider just the V-score and trend as a trade setup, or would I prefer it coming to the wave? So you're talking about the weekly chart of IGV? The only time where I'll say V-score only will suffice, Ralph, is the weekly chart. And even then, I don't like to do it. I have in the past, but I don't like to. So if you're asking about the weekly IGV, when I say the discovery price, is that starting to resonate? What I mean by the first hit at a level, and then we bounce up from it? I don't know that we're going to stop at the +1. I have to see proof of it. Is that making sense when I talk about discovery? Okay. So if I'm looking at one hit here at the -1, the second hit at the -1, yeah, so your entry was the second hit and this candle right there. I don't have a setup right now. I don't. In fact, if anything, V-score says we might have a little struggle continuing higher because of this previous high right there. See that? And look at what it's doing. It took a pause. It took a pause. Even if I didn't have the Darvis up there, the V-score said this is probably where we're going to pause, right around the 0.4 standard deviation. 0.4. Yeah, about 0.4. It's stuck. But I wouldn't buy up there. If you're looking at the daily, no, never just the weekly is the only one, Ralph, that I'll even entertain the notion of a V-score only. On the daily, I need something and something. So I know resistance is going to start to rear its ugly head around just above the +2, but more recently, it's stopping at the +2. So that's resistance. Someone asked earlier about a target via V-score. That's your resistance. Okay. So I'm going to put a little red arrow there to show you resistance. Okay. Where is my support? On the flip side, on the V-score. Maybe that area there. If not, I've got 2 hits down just below the mean. Now, what happens if you have 2 levels like that? Well, if price doesn't stop at this level of support, I know where it could go, that next level. But here's why you want something and the V-score. If I get down to this level, I mean, what's going on up here? What do I have? Nothing. There's no Darvis. There's no wave, right? I don't have anything to say, hey, there might be another reason for price to stop. So I would likely say, let's wait for a pullback to the wave and get that nice V-score. Okay? So a lot of times you might have multiple levels or multiple V-scores you can consider. Find the ones that are working together. Find the ones that are working together. All right. Okay. And by the way, I got some questions earlier last time about I do not use divergence, gang. I use only convergence. I only use directional. So no, I'm not looking for a V-score to do one thing. And in fact, convergence, divergence, yeah, or just divergence does not apply to the V-score. High here, high here. So I'm not really looking for that. No, no. I don't use it in any walk of my trading. But thanks for the question, Sachin. No, I don't use it. All right. Let's keep going with some examples. So yeah, IGV, that's the way I would look at it, both on the weekly and on the ETF. Now, just to give y'all a quick glimpse of what I would do next. All right, so this is what I would do next on IGV. Okay, so this is something that we do in the room. So for those of you that are going to be joining me in the mastery, there are a number of dashboards that I've created for mastery members, and I share them on Mondays. I run them fresh, share them on Mondays. One of the sectors we've had on our radar, and I know it's a little small, but this is IGV right here. IGV has been a relative outperformer for some time. So if I look at correlation to the NASDAQ, IGV is right there in 5th place. Okay. And then there are certain stocks that are also performing well in IGV. So again, I know it's kind of small. This is TEAMU, Palantir, WDay, QLYS, right? Intuit's down here. So this is how we then take a huge sea of stocks and then figure out, well, what do we want to run through the process, right? Because having the indicators to measure everything is great, but what are we measuring? Things that have relative performance. So let's say I take a look at team, right? There's nothing I can do with team right now. It's up, up, and away. And good for it. I'll wait for it to pull back, right? What about INTU coming from that list? If INTU can get back down towards a -2, great. They can come back to the wave, great. Why can I use the wave? Why can't I? Trend. And that allows me to use the support of the wave. If I'd like to then confirm that with support, and we do have a little bit of support right here at the +1, right? And you can see my +1 swooping in here, and it's pretty close to the wave. Okay, that could be a level to watch. See how we're stacking the tools together? Did everyone see that? Yeah, the -2 would be great. And this is actually a -1. The -2 would be great, right? But I may not get there. I might just have to deal with this bit of accumulation we've seen. Literal accumulation of shares at the -1. And that -1 is just below the wave. That could be interesting. That's worth keeping an eye on. All right. So not only can I look at, say, IGV, which is the tech expanded ETF, then we go and look at the stocks that are in that ETF and say, hey, what's outperforming? Right? Palantir is the one a lot of folks talk about. Let's see what Palantir is doing. PLTR. So again, let's start at the bottom of the chart together. Let's really start stacking and repeating. Trend, awesome. Wave, valid. The last time we sort of left a low was just below the +1. Just below the +1. I'd like to see a Darvis and wave and I may not get the and. I may not get the and, but I know I can buy a dip. I just got a dip and then I'll choose. Again, it's so right now, I don't know where the +1's going to be. I don't know if we get a Darvis between now and then, but I know at least which direction and what it is that I'm looking for. Okay. All right. Question. Dubai Kid says, now buying at exhaustion makes sense. Dubai Kid, now that you're adding in the volume of the VScore, now you can see why we're not alone in the trade. That while nothing but negative news will accompany a move down to support or any kind of sell-off, if someone's buying, you know, did Palantir have a bunch of bad news in here? Probably. Right? I think Michael Burry's telling everybody that Palantir should be worth 0. Those kinds of things can move the market when retail traders just follow things blindly. All right. So do we have accumulation in this area? Do you see that there? Even though you can see the support, price kept sinking a little bit, didn't it? In that same window. Price kept sinking, but you know what? It was absorbed darn near every time. What would I need to see? I would like to see a Darvis, something else helping out there. But everyone can see now, why did this thing take off? Well, you could say earnings, and that'd be an easy answer. But somebody was buying here. And for about a week. Does everyone see that? Somebody was just digging in. Size is usually the harbinger to an institution. Again, fill in the blank. Hedge fund, bank, major asset manager, somebody saw fit to buy in that area between about 125 and 120. Price didn't look like it was stabilizing, but volume was. That's why price alone is one-dimensional. Volume plus price, yeah, whole other story. Okay. And again, these are from an outperforming sector, and we're looking for different stocks that are going to move with it. All right. Next up is Dale, would I have taken IBM on that example that I was talking about earlier? No, but folks were asking about big moves on earnings, and I wanted to show earnings and non-earnings moves. No, would I buy this? No, probably not. But what I wouldn't do is sell it, right? What I wouldn't do is sell it. But I want to show you all, even my rules are pretty strict, but even though my rules would keep me out of this, what I want you to see is sometimes price is deceptive. Price deceives sometimes, gang. This would sucker in. And look, if all someone was looking for was a quick move to the downside, great. Where would you get out when price was bottoming out? So I just want to show you that even though things look sometimes on the surface like they're really going to start accelerating to the downside, this was accumulation of shares by somebody. Right? That's what I wanted to show you all with the VScore. Okay. Would I take the buy? No. But I want to show you what the VScore does, because part of our conversation about this is that price doesn't tell us the whole story. And it doesn't. And you can see an example after example. Sometimes it doesn't. Yeah. Okay. GGG, question on other people's indicators? No, I do not. No, never have. Never will. It's just not my style. Okay. So there are plenty of other traders here. That's an obvious point. I trade, frankly, unlike all of them. And I'm not saying that in any way to say better or worse, right? I use a very different approach. We use exhaustion trading. We're pretty much the only exhaustion traders here and have been for a very long time. We automate everything, and have for a very long time. So those are some of the key differences of what I do. I want total automation of my lines and levels, of my market structure. And no, I don't use any other tools other than what you see me share with you all in the room. Okay. Let's see here. Have I heard that Monday after OPEX is very volatile? Richie, I'll measure that with volume and the price movement ranges. And yes, I have noticed that the Monday after has been very volatile. In fact, in the room tomorrow, I'm going to share some data that I pulled. Because look, I'm still going to measure it with volume and volatility. I'm not going to ever stray from that. But are there, hang on, I do have this. Are there momentum, expiration, exhaustion levels? Yeah. Certain stocks do tend to have some OPEX follow through, both to the up and down side. And I've been doing a little bit of research on that. Yeah, I have been doing a little bit. But really, the thing that's going to be the telltale is, do I have a setup? And what's confirming it? How many ands do I have? And especially after OPEX, I would want to see volume. Because remember, OPEX volume is going to be based on driving price to where we'll likely see the largest number of options expire worthless. But then that money, that expired money, is going to go to work. So volume studies after OPEX are really important. Does that resonate? So I have heard and I've seen it firsthand, Richie, you're spot on. But all the more reason to say, well, is money coming back into the market after expiration? Are the hedgies, coming in and selling options again? And you'll notice it takes a little while for open interest really to start to pick up, sometimes after OPEX. There can be a little lull. All right, VScore. Shu asks, are there triple tops or triple bottoms better than double tops and double bottoms? Yes, I do believe so. Right. We can only have at least a double. I mean, everything's going to have at least two hits. One's the discovery hit, the other one's the confirmation hit. But the more times it hits, the more we see that every time we get to that volume level, size is coming in. It may not line up with the same price. See, that's what throws people off. They want double tops and double bottoms on price. What we're looking for are double tops and double bottoms, essentially based on volume. So here was a low right in here, right? And here's the next low down in there, right? Through about there. Notice it's pretty close, but it's not exact. And that's what hurts traders. They figure, well, if size didn't come in at the last time it came in, right? They're going to presume price is size. You know better now. They're going to presume that the support is the price level that we got to last time. You're now going to say, well, that could be interesting, but is size really there? No. Is someone really stepping in? They didn't do so till a little bit later, a little bit lower. And that's where double tops and double bottoms and V-scores, yeah, are amazing. Are amazing. In fact, I actually don't use double tops and double bottoms on price unless it's being confirmed by volume or volatility. Does that makes sense, right? Price double tops and double bottoms are very difficult because there's no way to know if 1,000 shares traded there or 100,000 shares. We want the one with the size. All right, so let's take a look at question on RKLB. Sure. Let's do the same thing. Now, again, you have a toolkit. I have a neutral structure in RKLB. I don't have the requisite color candles. So the daily I would pass on. Okay, I would pass on the daily. What about the weekly? Is there a longer term play on the weekly? Well, we've been down at this V-score just below the mean a number of times. Does everyone see that? The most recent hit was here. We got a little bit below it, but not much. So that hit of support had nothing to do with a double bottom at all, did it? The volume came in about 20 points higher. It came in a lot higher. So if I'm waiting for a double bottom like this, I'll be waiting. If I'm waiting for a double bottom like this, I can see where the size is coming in. So on the weekly, could you buy that zone just below the -1 standard deviation, which looks to be -2.7? This was -3.1. It's 0.4 apart. Could you buy something in that area? Absolutely. Is it always going to stop at a whole number? No. That's why if you run your cursor over top the indicator, you can get the read. And you can see, okay, that was 2.7. This was 3.1. This back here, by the way, was 2.0. Okay. All right. Semiconductor sell-off in July. Sure. Let's go take a look at semis. By the way, that semiconductor sell-off, I am by no means ever going to say that our job is prediction. It's not, right? Everyone's looking for that predictive tool. I would not ever recommend that. However, take a look at your structure. Look what happened in July. Was that before the sell-off? Yeah. Before the sell-off in July. So this is where we went neutral. And still are, by the way. All this. Before the sell-off really got ugly, what happened? The uptrend stopped. So if I'm ever pointing something out and you're not seeing it, let me know. The uptrend stopped. That doesn't mean I can't be bullish anymore, but I have to acknowledge that I'm not in an uptrend anymore. Higher highs, higher lows, that exuberance, it's fading. Then what did I get? I got a red candle. Got a bunch of neutral blue candles, right? And then I got a red candle. Well, now that you have the tools to look at some of this, go, okay, Rog, this isn't quite the same environment as when we were printing all these nice green candles. All right. What's the next thing that I'm going to look at? Before the sell-off, again, we had some highs up in here, but these are in the trend. Do I care about VScore resistance in a trend? Only if I need a target. So let me say that again. Do I care about VScore resistance in a trend? Only if I need a target, right? So there's no reason to short this. One of the easiest ways to destroy your account is just guess at tops and bottoms, right? Just guess at those levels. So some of the cues here were probably a little bit more subtle in terms of structure changing. And as soon as structure changed, I'm not really looking to be an opportunistic buyer. I really am not. So let's say instead of the daily, you ask yourself, Rog, if this is a hedge fund that's essentially blowing up, which is what it was, and this could be a lot of shares either changing hands or being sold off. There we go. What would be a good time frame to look at? Whenever there's does everyone agree that a hedge fund blowing up and the size of this fund and the leverage of the fund, if you were looking into the situational awareness, what time frame is going to be the best one to absorb that amount of move and size? And yeah, I know you know it's weekly, but yeah, it's weekly. It's the weekly chart. I don't use the monthly. It would be the weekly. Thank you, Yee. It would be the weekly. All right. Well, let's take a look at the VScore on the weekly. This is semiconductors. Where are my support levels? And I want to make sure everyone sees what I'm looking at, right? Just don't let me keep drawing without Rog. I don't see it. So I love that question about IBM. Thank you, right? So let's squeeze in some data. All right. That's the anchor date start right here. That's why it kind of has that line there. And then where do we keep stopping? Right around the +1. What do we hit on the situational awareness blow up? I can't make this stuff up, gang, and I'll make it a little bit bigger if you want me to expand this. You can really see the nuance. Where do we keep stopping? At or even just below +1. Everyone see that? When situational awareness blew up and you're thinking, I don't want to be shorting this. It's pretty bullish, right? And clearly, if they're blowing up, someone's got to buy those shares, right? We know that ultimately there was a huge story about Ken Griffin and Citadel. Yeah. Citadel ain't going to tell me what they're doing, right? We've just lost touch. If you're looking at when something's blowing up, and this is exactly what I was doing in 2008, it's not going to always be the exact level, but 1, 2, 3, 4, 5, this one right here was a little bit below, 6 times, 6 times right here. See that? Does everyone see that? Now, is the move over? No, if it comes back down, yeah, maybe there's another opportunity. And now I've got the Darvis. Now I've got the Darvis helping me out. So when these big blow-ups happen, don't try to trade them on a daily chart. Session by session intervals are not going to be great at absorbing debacles like this. You want to step out to a better time absorbing time frame. The longest time frame I look at is the weekly. So yeah, when does a Darvis print? Yeah, I'm going to show you all. I'm going to give you one moment here. The Darvis is going to print when the criteria of a minor high, minor low is completed. And I realized I didn't even give you all a break. I'm sorry. I am so sorry. Does anyone need a quick break? Great questions, by the way. Or you want to just keep rolling? I don't mind to give you all a quick 2 or 3 minute break if you need it. I just realized what time it is. So majority rules, yes or no? Let's roll. Most everyone's saying no, and let's roll. Okay. 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 Yeah, I'm sorry about that. All right. So yeah, awesome question. The time is just flying by. Okay. When I look at semiconductors, the question is, when does a Darvis start plotting? I removed the extension. You can do that on your Darvis. And this one started plotting on the week of August 10. So when I have a minor high and a minor low that completes with a little bit other stuff in the code, it's a price-based pattern tool. So the minor high we had was back in here. Hence, you see this resistance level, right? And so when the number of candles and the criteria are complete, then it'll plot. But the heart of it is the minor high and the minor low. And that's once that criteria is met and the requisite number of candles follow, it'll automatically draw. I used to draw this stuff manually once upon a time. And, one of the reasons that traders within about 2 to 4 weeks, and this is no exaggeration, those of you that are in the room, share your experience. I don't know what the answer will be, but my experience, having now run the Sector Secrets Mastery Room and other rooms in the past, my experience is it takes traders about 2 to 4 weeks to really get comfortable with all the moving parts of day trading, swing trading, and long-term account growth. Okay? So when I'm looking at the Darvis support that I have now, and I know that we've had this +1 standard deviation, I've got a setup. Would I use the wave in this instance? We're actually on the structure. We're actually starting to lose the structure a little bit, especially on top tier, which is personally what I use the most. But if the trend is no longer visible, and I'm going to turn that on so you could see the multi-trend. Bear with me. When the trend is no longer green, or we lose 2 segments of it, right? Now on the tops, it's still green. On top tier, you'll notice it's wobbling. And so, yeah, there are some differences. But I do want to be a buyer. I'd much rather be a buyer at the Darvis. And I'd much rather that Darvis coincide with the +1. And that's the VScore. Okay. All right. So that is what we've got there. Is this starting to gel? So what have we been doing so far in this session? We're taking a look at the multi-structure. Obviously, we're taking a look at the VScore. And you might say, Ron, what about VProfile? I don't use it as much on the daily and the weekly. For intraday, it's absolutely vital. For swing trading or long-term account growth, I don't lean on it as much. Is it still support and resistance? Absolutely. But if I have a trend and I can use the wave, if I have the Darvis and I can identify the support, I prefer that a lot more in terms of the combination that I would say I got the VScore, right? And. So that and, hopefully everyone's really starting to see why that and is so, so important. Here's a VScore bottoming out and the wave, right? VScore bottoming out. I think we touched the wave. We're really close. So I'd really like to see the Darvis if I'm going to buy this long term. All right. Let's see here. So yeah, anytime I'm talking about tops and bottoms, double tops, double bottoms, I'm not looking at price. We're looking at the VScore, because you'll notice the price isn't, that's where price, double tops, double bottoms, W's, M's, they're not that helpful because we don't know what's going on in terms of size under the hood. All right, great questions, gang. Let's keep pushing along. I can't believe it's been 90 minutes almost. So Sharon G, does that give you, looking at that situational awareness, does that give you something to say, Next time, and there'll be a next time, there is a major sell-off. Next time there's an earnings sell-off. Next time there's a hedge fund blow-up, and they seem to happen about every 3 years or so, almost, give or take. I know to go to the weekly chart. I know to look at the structure. So what about Micron? I don't want to use just one example and go, yay, it worked, right? Let's do Micron. So this is still a situational awareness question. The process on the weekly will be pretty much the same process on the daily. Where do we bottom out? Where was my price discovery hit? Right there. Okay. Now, before that, we had some good support just in front of the +1. And then the most recent, let me emphasize, the most recent was just below the +1. So going forward, I'll use the most recent. Or, just like anyone using support and resistance on a price chart, you can say, Rob, can I just look at both the levels? Can I highlight both the levels? Sure. If you want to highlight both the levels, great. You still need the litmus test of, have we hit something, as well as the V-score. Ideally, you're going to have that and. All right, so here comes the situational awareness. Everyone's freaking out. We're going to crash, right? So much drama in the stock market, right? That's everyone panicking. Everyone remember, it hasn't been that long. Panicking, panicking, panicking. By the way, where was Micron telling us? Let's talk about resistance for a second. Not about fortune telling, but where was the resistance on Micron? Just to get the habit of not just entries, but potential exits as well. Everyone see that? Yeah, we got a little bit above it. I'm not saying that that's where I would scale out, but I would expect Micron to start getting a little toppy. It could keep going, but there's size coming in. Someone's changing hands. Someone's taking profit into these moves. When people ask, how do you know if a trend is slowly winding down? It's not just going to be this. It's distribution, as Charles Dow taught us 120 years ago. It's going to get a little noisy. At a high volume level, these shares are changing hands. Could we argue from strong hands to weak hands? Maybe. And then once it's sold off, there's my low. Pull it right across. There it is. So if after the situational awareness, you're probably looking at this area right in here to build, if you wanted to buy Micron, and then you might say, Rob, we have a trend and we have a wave. Awesome. You can look at that as well. But just from a volume perspective, you can see both sides really nicely on Micron. Yeah? Okay. Let me make sure I'm keeping up with the questions here. Tony asked, top in VScore, then wait for minor high? Oh, could you wait for a minor high after the VScore? You could. Yeah, could you look for a minor high or minor low after the VScore? Sure, you could. You could. You don't have to. You might have to, especially if you're uncertain about whether or not, especially in a trend. I mean, we're not going to short this, right? I think everyone knows we're not going to short this. It's a trend. But if you're wondering, could things get toppy? Yeah, the minor high or minor low. So what that is, and this is kind of outside the topic, but I'll go over it really quickly. The minor high is a higher high surrounded by two lower highs, and a minor low looks like this. It's a lower low, right, surrounded by two higher lows. So this is the minor low. This is the minor high. And that's pretty much what the pattern looks like. So it's a higher high surrounded by two higher lows. Doesn't matter the time frame. All right. Okay. So I just want to mention, gang, this is our third session for the class. We had the tech session last Friday. We had our first session Tuesday where we went over each tool. And then today's the second session and last session of the class. All right, so all three of those together, when you go back and review, all those three together will give you the full picture of how to put the tools in your chart. We spent about 45 minutes to an hour on each tool on Tuesday. And then now we're putting the tools together as we're going through it today on our second day. Yeah? Okay. And then as I'm going through it, I'm mentioning what each tool is. So Jack, yeah, I'm going through what each tool is as we're doing it. So I'm guessing maybe a recap of session 1 would be super helpful. But yeah, we're talking about what each tool is as we're going through. So hopefully it'll just the repetition will help. Okay? All right. Next question is, so that kind of takes you through probably one of the trickiest things of trading, which is what happens when there's a massive move with news, with drama like situational awareness. How do you act like Citadel? Well, I'm never going to know what they're doing. We didn't even know they were the ones that were going to buy it. But how do you act like size? You track it. Size is never going to tell us, but it's going to be showing us that at certain levels, they're stepping in, right? That's what I'm pointing out there. And then we want to layer that with the Darvis. We want to layer that with the wave, right? Okay. Let me catch up with some of the questions here. Ralph says, thanks for the additional details. Yeah, of course. My pleasure. That's what the class is all about. Okay. Bear with me. So we took a look at MU. Now, MU on the daily? Sure. Let's just stick with MU. Sure. Daily MU. Can I trade daily MU? Even before we get to the VScore, would I have clarity of potential follow through by way of structure on MU? Not quite. So I would be very cautious about the daily chart of MU. Yeah, I would be very, very cautious. I don't have the consistency. No. Now, if you said, okay, Rog, I get it, but where are we stuck? You know, it's actually, you can see it pretty clearly. We are just right now chopping around between the mean at the 0 of the VScore and the +1. We're just chopping around in that area. Would I use the Volume Max tools on sub $20 stocks? Ralph, they're probably the best thing to use. Anytime you're looking at a stock, is there one you have in mind, Ralph? If you do, let me know. I'm happy to use an example. But yeah, if you're talking about something under 20 bucks, volume is always super important. Yeah. Volume is extremely important. So yes, if you want to trade under 20, I tend not to personally, but could you? For sure. Okay. And Tony, the minor high, minor low question with the VScore, think of that pattern, everyone, that minor high, minor low, as a based confirmation of some exhaustion that should accompany another tool. All right. Okay. And one other thing I'll mention, gang, when we're talking about the VScore and the VScore bands, right? They're color coded, and you can change the colors or you can make them thinner or thicker. They're color coded so that the white line, right? They'll jive, all right? They'll be synced up. The only thing I would make sure is if you start to re-anchor, when you start to test and re-anchor, let's say you wanted to anchor to earnings, or you wanted to anchor to a peak or a valley, a low, make sure that you change the date on both the bands, the VScore bands, and the VScore itself. I sometimes forget. So I'll start playing around with the VScore and I'll forget to update the bands. Or while you're re-anchoring the VScore, just hide the bands until you settle on where you're going to anchor, because you want to make sure they're in sync. All right? You want to make sure they're in sync. So I'm going to hide the wave. Bear with me. We did it earlier. And you can see the thin lines of the band on the chart. All right. Next up is, so we talked about the sub $20 stocks. Looked up Micron on the daily. And let's see. Which lines are the wave versus the bands? Jack? Yeah, now that I've removed the wave, again, I don't like to stack everything because it can be visually a lot, but these are the bands. And then the wave I was talking about, right? So you'll know the difference because of the colors. So the wave will always be the green, blue, and red if I have it on. If I have it on. Otherwise, yeah, you'll see that each one of these, actually you can see it right now since I've squeezed everything in, they coordinate with each one of the lines. So when I get to the +1 here, right, that's this right here. I usually thicken up the anchored volume weighted average price itself, the 0, just so I can know where the middle line is. I usually tend to thicken that up. That's the 0. And then you have your -1, -2, -3, and of course the colors combine, right? -1, -2, -3. All right. What else? Robbie says, when assessing a VScore confirmation hit, that initial discovery, right, do I use a tolerance limit to determine whether the values are equal? You know, Robbie, because we go and point by, you can see we go 5 decimal places. I don't know that I have something where I'll say it's got to be within 5/10 or it's got to be within 0.03. I don't know that I have a level like that, because remember, what I want to see is the V-score and something else. So if that level is the wave, I've got a price level specific to where I want to get active in the wave. And I'm not really worried if the V-score is 3 or 5/10 different. I want it in the same area, right? But it doesn't have to be a perfect hit. You're not always going to get a perfect hit, especially since we're going to the 5th or 6th, whatever decimal places we're going to, 5th. Yeah, you're not going to get a perfect hit, but I will look at 1 point and then 2 digits after. So usually what I'll look, and I think Thinkorswim just does it this way, but I'll look at 1 point and then 2 digits. That's so I don't need it to be perfect. It'll seldom be exact. Does that make sense? So what's the tolerance? Remember, there's going to be something on the price chart that should also be agreeing with why we're doing something. Does that make sense? All right. What about CTAS? Sure. Let's build this one up from the bottom again. And on the daily. Okay. So on CTAS, and again, I realize that many of you are using tops and many of you are using top tier. I'm using tops for the class, but I don't have the 5 green candles in a row currently, right? 1, 2, 3. I do have 1 neutral candle. I don't love it, and I've lost a trend. So that's where it's not a hard no. But Ralph, when I don't have the clarity of a trend and I don't have the clarity of the consistency of the candles, and by the way, you might say, Rog, was there an event? This is dividend date. I would expect a stock to sell off by its dividend, usually by 2. Now this is a 52-cent dividend. So I would expect about $1.04 in terms of a pullback on the chart. So this is a little bit, it's a light event, but it's still an event. As the dividends paid out, I would look, not before, but the day of and the day after. Oftentimes we'll see a pullback of about 2x the dividend minimum. So another event to be aware of. But would this be a hard no? If this candle didn't go blue, I'd probably say, yeah, that'd be great. The dividend date's going to probably get me thinking, yeah, we're going to pull back, at least a buck. But let's say you got into that. What was the reason for it, though? I don't have a double hit. Not really. If you did look at, say, this low right there, you didn't take much heat, right? You didn't take much heat if you were looking for that to correspond with the Darvis. You actually didn't take much heat at all, did you? That buy would be right around, say, 199.5, maybe 200, 201. And it made a low of 196.5. So, I mean, you did take a little bit of heat with the dividend, but not bad. Okay. So whenever you're looking at the grab candles, the green, the red, the blue, there's 2 shades of each. The dark red is a down candle. The light red is an up. So we try to keep the Japanese candlestick interpretation. Red is bearish, green is bullish, blue is neutral. Okay. And yeah, that neutral candle, I don't love it, but I at least have some context for it now. At least have some, I mean, I wouldn't be bearish, that's for sure, right? I would not be bearish. I can't say it's a good clean setup though. I think we've seen some better ones. And by the way, gang, if you look at a chart and say, this setup just isn't clean, keep looking, right? Keep looking. FSLY, sure. FSLY. Okay. FSLY, this was one I was actually looking at yesterday, but because we have an event, right? Because we have an event, OpX, and I had a neutral candle. A neutral candle is a warning. What's it warning? It's simply warning, not bullish or bearish. It's warning that what was once bullish is getting neutral. Okay, and then the red, we continue to sink, right? Now, because I don't have the green candles, I would probably pass. But I would expect there to be some support, but I likely won't participate. Right? The VScore itself is not going to be the only reason I get in, although it does work, I will say, but I would say I'd pass on FSLY. All right. Let's see here. Jeff is asking about intraday. Jeff, we went over intraday on day 1, so I wanted to go over daily and weekly charts here on day 2. We've spent a lot of time on the sweep and intraday levels the previous session. So I think you'll get pretty much any question about that. And for those of you that might have missed the tech session or even session number 1, remember, we've covered all that in each session. So I want to make sure when you go back and review, right, you've got a full complement of the information you need for the class. All right. As far as point of control, value area low, value area high, can I talk about it? There's support and resistance, Phoenix, just like when we talked about them on intraday. But again, if you want to review the VProfile, I use that primarily on the intraday, the 5-minute day trading. But if you're looking at a VProfile, value area low is support, value area high is resistance, and point of control is going to be sandwiched within them. And depending on which direction you're trading, it could be a target. It could be, if you're coming off the value area high, it's potentially support. If you're coming off the value area low, it could be potentially resistance. So, you know, if I look at the 5-minute chart here, here's your value area low, here's your value area high, here's your point of control. What was I looking at for in this area? I have a Darvis, and there's my value area low. And actually, we bounced right off that. Yeah, and then this level, the value area high, would simply be resistance. Almost everything can be boiled down to support and resistance, Phoenix. Yeah, but again, I use that primarily on the intraday. It's not that it doesn't work on the daily. It's just not in play as often. Unless the whole year's been really choppy and range bound, will at some point exceed one of those two levels, and they're just not in play that much. Yeah, they're just simply not in play that much. Kel asked the VScore and the bands. We just covered that, Kel. The bands are going to reflect, you know, the same colored bands that are on my chart. They're going to reflect the reading of the VScore. So, for example, if this is my mean, and we have support near the mean, this level here is represented by the band of the same color. Now, I know if you want to change the colors, make them thicker, whatever you like, you have in the settings the ability to change that, but they just correspond with where that V-score is on the price chart. All right, what about ROST? Sure. And ROST, well, I won't, well, I mean, you asked all 3 time frames. Well, day trading, I'm looking back in time. You know, the market's going to close in 13 minutes, but sure. ROST. All right. As far as what, if anything, I'm even allowed to do on ROST, let's just clean this chart up a little bit. On the day trading, again, it's kind of hard to go back in time, but I have my extremes. That's my resistance. So these are my major levels of the V-score. And then as the day goes on, I might get minor levels that I can look at. But again, it's kind of tough to look at it going into the end of the day because everything's already happened, right? And the volume profile would have moved, and it's hard to recreate the day. I think my bigger issue with ROST is more event driven as far as what, if anything, I would do, regardless of what the V-score is saying. So you might say, Rog, we're kind of close to maybe a retest of the mean. Yeah, we very well might be, but we have earnings coming up. I will never guess at what earnings are going to do. So earnings are coming out. You can see here after the bell today. So I won't do anything with ROST. And I really can't, right? It's bearish. It's not weak enough to short. I'm nowhere near a resistance level to do so. And I don't have the consistency of the green candles either. I know that there's a ton of resistance around this +2 area, right? You can see where all of this started topping out at +2. That's pretty much where you can argue institutions soaked up the Momo chasing to the upside, right? Oh my gosh, look at all these gaps. What did institutions do into all that momentum? Retail traders kept buying, and they were soaking up that liquidity. Does everyone see that? But going into earnings, I'm not going to make a guess. I don't like to trade earnings. I know some people love it, but I find it's way too much risk. The payout is, well, Rog, what if it makes a big move? But to me, it's like a grocery store scratch-off lottery ticket. But what about the weekly? Yeah, so you asked about all 3. So let's go to the weekly chart. All right. Now, if earnings can drive price lower on the weekly, now we're talking. Now we're talking. I would still sit aside, even on the weekly, until after earnings. But tomorrow, I would wait till Monday. Personally, I would wait till Monday. And I'd like to see price action. Take a look. 1, 2, 3, 4. You can even say maybe that would have been a 5th. We're really close to a great level. And we definitely have a gorgeous established trend. I'm with you, my friend. But the event is the issue. So if after earnings, we see a sell-off and size soaks all that up, we probably won't go much below the +1 standard deviation. And then if we're sitting inside the wave or sitting at the +1 standard deviation, right? Make this a little bit bigger. That gray line there, right around, call it 226.65, or the top line of the wave right around 228.80, that area. Then it might be interesting, but let's wait for earnings to happen. Let's see if size absorbs the volatility of the event. And then, yeah. And then at that point, yeah, there might be a really nice long-term account growth trade via shares or leaps in Ross. Yeah, in Ross stores. I like it. I like it. So Ram, that's how I look at each individual time frame. Most people will look at the time frames and want one to agree with the other. We're looking for what each one is showing us in terms of structure, levels, and that VScore reading. Okay. All right. Robbie says, yes, that makes sense. If I'm also understanding correctly, the actual entry triggers based upon the and you get from the price level of the wave PMR Darvis. Ideally, yes. And look, if you want to use the VScore band to get the price level, which is going to correspond with the VScore reading, that's fine, but I would like more than one thing. Because really the VScore and VScore bands are really one thing. They're not two. On the weekly chart, you can go VScore only. I won't recommend it, but you can. It is valid. I've tested it and it does work. But if you can find an and, in this case, I think the wave would be a really good choice for your and. So you got it. I would like to have the price definition, not just from VScore/VScore bands, but the and. You got it. You got it. All right. Bear with me here. GGG asks, if and when I join the mastery, I can also get the Darvis for TradingView. Then I would have all the things. GGG, yes, right? Remember, you've got tops in terms of, well, actually, I've been talking about some of the tools you all have access to. So let me at least recap so everyone's on the same page. Here we go. So what you've got are the grab candles. Yeah, the multi. And yes, there are a whole host of other tools in the mastery. Darvis is one of them. The opening clearing range tool is another one. Many of you I know have tops and have top tier, so I have referred to the Darvis, and it is available to members. The Darvis, original Darvis in the room. Yes, yes. So yes, you can get that. You bet. And remember, that's what I'm going to use in the room, that whole culmination of tools. But with this, again, your support and resistance can be the grab candles, which include the wave. Obviously, VProfile can be another one. Right? When you're intraday, Volume Sweep Pro is another way of looking at support and resistance. The VScore bands are going to give you support and resistance on the chart. Yes. And then if you want to add in things like Darvis, opening range, zones, there are a number of tools that we make available to members in the room. Yeah. So on day one, you can go to the file section and download that. And then on Monday, this upcoming Monday, Lorna Bot can walk you through, because every Monday we do a tech session. Every Monday we do a tech session, as you can see here from the schedule. GGG. So at 12:30 Eastern, Lorna does a full hour of tech. We don't want tech ever to be the issue, but no, gang, as far as what the tools are, how to install them, remember that the whole idea, especially of a class, is for me to show you how to use them. And then remember, you've also got the install session that you can watch at your leisure. And then if you need some more live support and you're in the room, every Monday we do that. And this is probably as good a time as any to remind everybody, since this is our last session of the classroom together, you do have upgrades available to you, but you will need to call the office. The number's at the bottom here. And in terms of if you have the basic package, since we are talking about some of the tools and goodies you get, we do have the basic package. And if you want to upgrade to Pro or Elite, please do so, because once the class is over, I cannot. The office already was giving us plenty of pushback on this. Believe me, I'm not trying to throw anybody under the bus, but believe me, when they cut it, they're not going to honor these prices. So this is for the class only. I just want to make sure everyone knows that. So you can upgrade to the 90-day Sector Secrets membership or the 1 year. And as we mentioned, we offer a lot of things in terms of membership once you're in there, because again, anything that you want to master is going to take practice and repetition, kind of like what we've been doing here for the last 2 hours, right? It's not enough to learn what to do, watch list building, putting the opportunity into practice repeatedly with me, telling you what I'm doing, so you know why you're doing it and how to apply it in real market conditions. And we've taken a step in that direction with what we've been doing here. So that's where the mastery, for those of you that asked about what do you get in it, yeah, that's where it makes the difference. The class gives you the tools and the knowledge, right? We talked about how to put these tools together, how to read them, and we're using current examples so you see, hey, the real world is not as neat as a frozen winning chart, right? The real world is just not as neat and tidy. So you're going to apply all this in the real market with me. And again, that's where the mastery makes a difference. We're building your confidence by repetition, applying the tools. And then as you do that, the thing you're going to get, and hopefully the thing you have even now, is a much more confident approach to some of the coolest volume tools that you will ever get your hands on. So for those of you who got the Pro package and you got the 90, you can still upgrade to the Elite. So again, that's a 1-year subscription. And this is the one that I'll tell you, gang, that was the one that Trish Boss absolutely fought for. The Elite package is by far the best value, because with this promotion, you got a discounted rate for a year, plus all the tools in the class. The Mastery itself is priced at $24.70. So on top of those discounts, you get another $500 off next year's renewal. So you get to lock in a rate of $19.70 instead of $24.70, which you'll find is on our website right now, right? So if you're already a member, if you're already a Sector Secrets member, I adore you. You know this. If you'd like to upgrade or renew your monthly, quarterly, or annual and lock in the promotional rate, give the office a call. They'll be happy to get you all set up with everything, all right? So just remember, if you are a member, give them a call. That's the number at the bottom. So I want to make sure everyone knows what their choices are, and we'll be getting right back at it tomorrow. Tomorrow's options expiration. Our next swing window is opening with the drive to these high open interest levels. So we're going to day trade in the morning, as we always do. And then we're going to look for some swing trades together with these tools, because OpX is a great time to put volume to work. So we'll be doing that tomorrow, starting at about 10:35, and we'll be day trading starting at about 9:20. All right. What other questions do we have? Can you use the tools on commodities? You can, Ralph. Grains, meats. Sure. The only thing I'll caution you with, Ralph, is if you want to trade indices and treasuries and currencies and metals and all that stuff, and then you want to go off to what I call the grocery store commodities, I would say if you're looking at, for example, gold, that's really going to be moving more with the indices. If you're looking at copper or Bitcoin, bonds, they're going to move with the indices, quite a bit, right? But once you get off into live cattle and corn and soybeans, you have a different set of hot zones. You have USDA crop reports. You have weather issues. You have your planting season, harvesting season. So there's a different rhythm to those markets. Yes, you can trade them, but there's just some other information that you need to know, which is not a big deal. It's not hard to find. I'm happy to point it out in the mastery room if you want to do it. But now it's so different than the vast majority of trades we're going to put on. It can be a little much. For example, I love trading grains and softs, and I love softs. Cocoa and sugar used to be my jam, but they move so differently. So if I'm day trading the NASDAQ, or we're swing trading like we were and are things like healthcare, and Bristol Myers Squibb, all of a sudden shifting gears to what bean meal is doing, it's a very different plate. It's a very different plate to spin. And if you're spinning a lot of different unrelated plates, that's my only, I would just say, just caution. But volume is volume. Yes, it will work. But the reality is, and this is where a lot of times reality is lost in any kind of classroom. The reality is now you're looking at very different things, moving for very different reasons, as opposed to things that are moving a little bit more together, right? And that's one of the reasons we're in the mastery when we alert out a trade. So if those of you wondering, Rog, okay, I've joined the mastery, what can I expect? I'm going to alert out my trades. And when I do, I'm going to give you the entry. I'm going to give you the first target. I'm going to give you the stop loss. We're going to give you guidance on position sizing. That is what an alert looks like in our room. So if you're wondering, yeah, Rog, how hard will it be to adjust from the class and the things that I've learned here to actual live trading with you? It's very seamless. You've basically seen kind of a live session right now because we're setting up ideas. And the only difference between what we did today and what we do in the room, the main difference, I shouldn't say the only, the main is once we find a trade idea and we like it, I'll alert it out with all the relevant levels for how we're going to scale in the first target and how we're going to close the trade if for whatever reason it doesn't work. And that's going to happen sometimes. All right. One other thing I got was a question about the sweeps at the end of the day. I will tell you, gang, I don't like to day trade the last hour to 90 minutes of the day, but both Lorna Bot and I, who've been testing the sweep, realize it does work really well at end of day. It is really effective. And this is live that I'm showing you right now. It is really effective end of day. I just showed you the NASDAQ. So again, you're going to want, and I want to show you two examples, one where it was great, like the NASDAQ, and one where, because I always like to be realistic about this, one where we had a sweep, but sweep plus what? You might say, Rog, when do we get the VScore topping out? Did the VScore help us out at the extremes? Not till much higher. So when I talk about and, gang, it's so easy to look at the bear and say, I got to buy. Be careful with that. Always work that and. I want to give you a little cautionary tale as well as, okay, well, what do we have here on the NAS? I've bottomed out here before. It wasn't perfect, right? And then I got that's a better alignment. Is it perfect? No, but that's a much better alignment. So remember, end of day isn't bad. There are going to be sometimes these sweeps that happen at the end of the day. So those of you that do like to day trade, the end of day sweeps, there won't be as many at the end of day as I think there are in the first hour where we day trade, but it is pretty darn effective. Yeah. So what do we trade in the room? Yeah. So when I see you all tomorrow morning, yeah, what do we trade in the room? For the most part, when I'm day trading, index futures and their related ETFs, gold. Occasionally we might look at crude and Bitcoin, but most of the indices. And that's important because if you want to then look at individual sectors and stocks to day or swing trade, you always want to start with the top of the food chain, which is the index, right? Probably one of the things that most traders do when they start trading is they look at way too many things, especially if they're a day trader. They'll be scanning and sorting and doing, looking at 20, 30 symbols. It's hard enough to keep up with about 8, and you're going to miss trades. So we keep a very focused approach to those of you that want to trade S&P, futures, ETF, SPX. If you want to trade the NASDAQ, the Dow, the Russell, there's an ETF equivalent to all of those. Gold, gold futures, gold ETF. Yeah, we keep it really focused on the day trading. Now, once we get to swing, we have the luxury of time. And we open it up a whole lot more. So, you might say, okay, Rog, what would a swing look like? I think just this week alone, we took profits in Visa. We took profits in Bristol Myers. We scaled out and took profits on healthcare, Coke. Am I missing any? Those 4 are off the top of my head from this week alone. Yeah, that's it? Okay. Only 4. Yeah, sorry, only 4. Only 4 winners this week, 4 days into the week. All right. So let me see any other questions as we wrap up. What indicators do I use that's not in the volume max? Uh, the only one that's the only two that are standout that we use pretty regularly is the Darvis, which you get when you're a member in the mastery, and the price movement ranges, the hourly and daily price movement ranges. But when you are in the mastery, by the way, we do make the hourly price movement range for the indices, S&P, NASDAQ, Russell, Dow, the most popular ones. We do make the hourly price movement range for indices available to members. So there's a lot of goodies on the inside of the room. I mean, you got a lot of goodies in the class, don't get me wrong. But yeah, once you get inside the room, who's to say that membership has its privileges? What is that? American Express? Yeah, it does. Membership has its privileges. So yeah, there's a lot of goodies in the room. One of the other ones that I haven't talked about, because it's not really within the volume spectrum, is things like the opening range and the initial balance. We have a tool that automates that. Yeah, we have a lot of very cool things. In addition to this, now, some of you are going to have the volume max, and a lot of our members in the room, well, weren't as smart as you were to take the class. So you're going to have the volume max. Not everybody does. So you're going to see a lot of things that you probably didn't before, especially if you're a member for a while and you finally got your hands on the volume max. You're probably already thinking, oh gosh, Rog, this changes a lot, right? In terms of what I can do and when I can do it. Yeah, amateurs open the day, pros close it. I would focus on the open, Tony. I'm with you there. But some of the sweeps, especially on the indices, are pretty darn cool. And I've noticed that on and off for about the past 8-10 months. I've been using the sweep tool since early 2000s, but this is the first time we've codified it and automated it. I didn't have it automated before. You're getting it automated just basically after I finished testing the automated version. So it's going to open a lot of different doors for sure. All right, gang. So thank you so much for being a part of the class. This is absolutely one of the most unique and powerful toolkits that I use. Volume is everything. And we've shown so many times where price and volume don't always tell the same story, but you're finally finding out now, Ron, volume is almost more important than price. Almost. Because it gives price context. And then speaking of context, you've got a number of other tools now that are going to give your individual symbols context. Am I in an uptrend? Am I in a chop? That's going to change the way you look at the way in which you will deploy certain tools. So if you have a choppy market tool that you love, you're going to want to find a neutral market, hopefully bouncing between the value area high and low, or bouncing between a VScore zone, or bouncing between some Darvis levels, right? And then when you find a trend, you're going to have a different attitude about what you can do with it. You're not going to be so concerned about a pullback in a trend and panic like everybody else. You know that if volume is there at your low, you can buy. You know that as the market continues higher and you're worried about when a trend might end, again, VScore is going to give you some insight. Okay? All right, gang. Thanks again for everyone's time. Please remember, gang, that we have 3 recorded sessions as soon as I shut up that you can go back and recap. Again, I appreciate everyone's questions. What I wanted to make sure is we have 3 unique sessions, and when you go back, right, you're getting information unique to that topic for that replay rather than going back and rehashing what we've already covered, because we've got the archive for you. All right. Be good to each other, gang. Thank you again for being a part of the class. Have loved doing this with each and every one of you. And I'll see you all on the inside. All right. First session tomorrow at 9:20 in the Mastery. Looking forward to seeing you all there. Be good to each other, gang. I'll talk with you soon.